Thanks for joining us, and don't forget to subscribe and hit the like and the notification button if you want to see more. Hey everyone, it's Kevin Wadsworth here, of course, NorthStarBadCharts.com, and we're going to take a look at my latest expectations for Bitcoin. But before we do that, we're just going to cast our minds back to the forecast that I issued at the beginning of May so that we can verify that and see how it's going before we look at what I think is going to happen next. So I'm just going to stop showing my face and start sharing the screen here. So bear with me a moment. I will share my screen. And as I say, I'll turn my video camera off. There you go, that's the camera off. And we'll share the screen, shall we? There we go. Okay, so we're looking at the Bitcoin summary chart, which I put out at the beginning of May. Back then, the price was breaking down. It had already broken down below its 200-day moving average, and you can see that it was breaking down below critical support. My expectation at that point was that the cycle top was in. It's becoming increasingly clear that the technical evidence was swinging very strongly in favor of a retrace all the way back down to potentially just a few $1,000s, given the fact that we were at around about $70,000 at one point, near enough. That is quite a large drop, to say the least. A drop of I don't know, 90% or so certainly looked possible, and perhaps more realistically, a drop between 60 and 80% was very likely. So at that point, we were at the yellow circle. My forecast was that we would move to the orange circle and then the red circle with a high degree of confidence. That's backed up in part by the behavior of the stochastic RSI on this chart here, on this weekly chart. And you can see that we were getting into what I've labeled there as the plunge zone. Some people call it the oversold zone, and some people refer to the zone at the top as the overbought zone. But that's a bit misleading, because it implies that at any second the indicator can reverse and take price back up. It kind of implies that once you're down there, you're going to go straight back up again. That's clearly not the case, as in box number 4 and 5 in particular. The stock RSI lingered down in that low zone for a long period of time, allowing the price to just trend down and down and down. And every time you thought it was moving up, it didn't. So down we went, and of course we got into this box with the question marks in it, and the plunge continued. So we hit my first target of 30,000 very quickly. We hit the next target somewhere around 19,000, 20,000, that kind of zone, very quickly as well. We've since rebounded, but not convincingly. I'll move on to that in a moment. And my final expectation was that, as it says in this box here, the dreaded reverse symmetry move. The grey circle is a low probability. So we've had the high probability moves complete. Now the low probability move is potentially in front of us. So what we want to ask ourselves is the probability of hitting that grey circle any different to what it was back in May? Well, given the fact that we've hit the higher targets, hit the targets in the orange and the red circles, it's confirmed the downtrend, which has by default increased the probability that we're going to see somewhere in that grey circle. So let's look at that in a little bit more detail. Here we go, and this is how the chart's looking now. So I'm visualizing this using the tried and tested arc patterns. In this case, it's an inverted arc or a dome, so an upside down arc. Some people refer to them as cups and handles. If I put it upside down, that's how it looks. All I've done there is flip the scale. So you can see that when you flip the scale, it looks very, very bullish. We're building a bullish descending channel or a flag, and these flags, just like the earlier ones here, on the vast majority of occasions break to the upside. So this looks like a bull flag when you flip it upside down, and you can see, of course, if it breaks to the upside, then it means the price of Bitcoin is going lower. So I'll put that the right way up again, and you can see that instead of it being a bull flag, of course, it's a bear flag. So the price has been rising in a bearish pattern. When you get these sort of rising channels in a bear market, it's not a good pattern. It usually ends in a break to the downside, and we've got several factors here that are counting against Bitcoin. I mean, the dome itself, we're getting towards the edge of that now, and we could potentially go a little bit higher. In fact, the 30-week or the 200-day moving average is up above 32,000 at the moment. I have my doubts that we would get that high, but if we get a spike above this dome, we could meet the 30-week or the 200-day moving average somewhere, perhaps in the region of 30,000 or so. But my more realistic expectation is that we don't make it that high, and that we're closer to the highs of this move than closer to the end of this move than we are to the start. So I'm just trying to inject a dose of reality here and suggest to you that even if we get an exciting little reversal to the upside here and we get to around 27,000, the risk there really does begin to outweigh the potential reward. And I wouldn't be looking to get long on Bitcoin until or unless we get back above the 200-day or the 30-week moving average. And that would be at considerably higher levels, of course. So this for me is shaping up as a bear flag until proven otherwise, and a break below the support on that bear flag, which is somewhere close to the 12-week moving average. Actually, as it happens, the red line there is homing in on this spot at around about 22,500. So a move certainly down to 22,000 or lower will break the bear flag to the downside, and that'll lead us back to the previous lows here in the region of 19,000, or even down to that spike low there, which is closer to 18,000. So that 18 to 19,000 zone would become almost a dead cert. And in my view, at that point, it would make the probability of a move into the target zone somewhere between 10 and 12, or perhaps say 10 and 13,000, highly likely. And once there's always a possibility of a drop into the, well, labeled here, the lower probability target zone. I'm much less confident of any movement into this zone here. That would depend a lot on broader markets and what's going on with the broader markets, of course. And once down here, you just have to be very defensive and very cautious and wait for the chart to give you that evidence that you need, the scientific evidence that we've got the all clear and things are turning bullish again. So that's my forecast for Bitcoin. I suppose if I had to give probabilities on it, I would say that we have a 70 to 80% probability of a downside break and a move down into this target zone between 10 and 13,000 US dollars, and only probably around about 20% probability of an upside breakout and a renewed bull market. So my feeling is that it's the odds are quite strongly stacked against Bitcoin at the moment, but we can't completely rule out the possibility of a breakout here and a move to the upside and good things for the cryptos. You can't entirely rule that out until this breaks to the downside, but probabilities of a downside break, for me at least, strongly outweigh the probabilities of an upside move. So that's how we're seeing it at NorthStarBadCharts.com. If you want much more detail and analysis on things like, for example, the Bitcoin dominance chart, or the altcoin index, or the Bitcoin total market cap, or Litecoin, Ethereum, and the altcoins, we cover at least, I think, 30 or 40 of the representative altcoins in some considerable detail over at NorthStarBadCharts.com, or when the markets are moving strongly in one direction or another, we go into even more detail with those coins. But we're continually covering, as I say, Bitcoin dominance, total market cap, and the altcoin index, along with Bitcoin and Ethereum, of course. So that's it from me for now. Hope that was useful for you, and see you all again soon. Bye for now.